Welcome back to the Intelligent Investing channel. Today, I want to go over an investing strategy that's fantastic for beginners and experts alike. It is a really safe way to put your money into the stock market, not take too much risk, and know you're going to see a return at the end. This is a strategy that's really put on by Warren Buffett. He suggested this. I'll link in the description a bet he made between himself and a hedge fund manager that said that this strategy would give you a better return than putting your money into a mutual fund or hedge fund over a long period of time after all the expenses and everything are taken out. And that strategy is investing your money into an S&P 500 index fund or ETF. With Robinhood, the ETFs are easiest, and that's why I use SPY and VOO. Those are my two favorites. SPY I have more into, and VOO I'm kind of using as a benchmark, and I'm just going to own one share. Both are great, and that both will do about the exact same thing. You can see here that VOO, in the last 5 years, it's netted 104.47% return, while SPY has done a little bit less with a 103.77% return over the last 5 years. So with the S&P 500, the average P/E ratio is 24.04, dividend yield is 1.94, and it really is a safe bet to go up year after year after year. Since its inception, the S&P 500 has averaged about 7% return per year, and that includes some really bad years and some really good years. So you know that when you put your money into an S&P 500 ETF, it's likely going to go up even if it doesn't in the short term. With the talks of the bull market coming to an end, it's still a safe place to put your money unless you are convinced that the S&P 500 will never hit another all-time high again. And that doesn't seem like a likely bet to me, considering it's hit an all-time high over 20 times this year and hit an all-time high 18 times last year. I just wouldn't bet against the market continuing to go up, and that's why I would suggest putting a big chunk of your initial investments into S&P 500 ETFs. One person I really like to listen to is Cramer on CNBC. He suggests that people put their first $10,000 investing in S&P 500 ETFs and not even to touch normal stocks until then. I don't want to go by this strategy just because it's really not that exciting, and that's definitely a knock on it because you don't really get to learn as much when you just have all of your money into the S&P 500. But it's really a way to avoid some big losses that you can suffer when you're playing around with money in other sections of the stock market. So, if you guys agree with this strategy or find it to be a little bit flawed, please let me know in the comments. I've been loving all the support you guys have been giving me in these comment sections, and it really encourages me to keep going and make more videos, try and make this channel great. Because I really think it can be. I'm not going to be one of the YouTubers who does clickbait titles and convinces you can make $1,000 in a day by betting on these penny stocks. That's just not going to be me. Just subscribe for good, solid information that I would back up through my investing, and I just really believe in. So drop a like on this video, give me a comment, please subscribe if you liked it, and have a good day, guys. See you next time.